Welcome, everybody, to this episode of The Monthly Blend, a monthly video podcast brought to you by Next, powered by Schulman Rogers and CONNECTpreneur. I'm Tian Wong, founder and host of the Big Idea CONNECTpreneur community. We are a global community of over 30,000 investors, founders, and business leaders from around the world. I'm also the CEO of Opus 8, and we help companies and alternative investment managers raise capital through our network of over 3,600 accredited and qualified private investors, angels, and family offices throughout the United States. Along with my co-host, Anthony Millen, who is founder and chair of Next, powered by Schulman Rogers, we're thrilled to bring you this monthly video podcast, which covers trends, information, and interesting research and tidbits, as well as fascinating interviews with game changers and newsmakers here in the Washington, D.C., Baltimore Metroplex. Anthony and I started this podcast about 2 years ago as a way to increase awareness of cool, innovative happenings in our region, to break down silos, and serve as a mechanism to do our part to help bring the region together and to help foster innovation and entrepreneurship here. And today, we're absolutely thrilled to have a conversation with two regional leaders of Techstars, which is one of the largest pre-seed investors in the world, with over 7,300 founders from around the world in a diversity of industries. Techstars supports many of the world's best entrepreneurs with access to capital, mentoring, finding customers, hiring, talent, and choosing the right infrastructure, and much, much more. Today, we're joined by Keith Kami, Managing Director, Techstars Washington, D.C., powered by JP Morgan, as well as Adam Phillips, Managing Director of Techstars Equitech Accelerator. I'd love to have our guests self-introduce, so let's start with Keith. Keith, thank you for joining us.
Thanks for having us. I'm so delighted that you're bringing together this sprawling and powerful ecosystem. So thanks for all you're doing for that. And it's a pleasure for Techstars to be playing our small role in helping support it as well. By way of personal introduction, I'm a techie by training, so an old computer science guy, and I've been a founder for most of my career. I founded a venture-backed company in the fitness tech space before fitness tech was a category. So that was back in the 90s, and we raised that was my venture-backed ride. I think we were the first venture-funded fitness tech company and raised $50 million for that in multiple rounds, and ended up exiting to a health tech company in the UK after merging with the team that put the sensor in the Nike sneaker. And then my second startup, in reaction to working with VCs for the first one, which was a great ride, was to do that not at all in the second one. And we bootstrapped and the keep it small, own it all model for a franchise rollout in the children's gym space, where we created high-tech gyms for kids under a brand name Great Play. And since then, over the last decade or so, I've been advising and angel investing in early stage startups for several years before joining Techstars, which I did about 5 years ago. So being someone who loves supporting startups, there is no platform better on earth than Techstars to do that. So when I was doing what I loved on my own to bring it to Techstars, and I initially started Techstars in a management capacity. So by way of background, I was managing a worldwide accelerator footprint based in the DC area to go travel around to other places, given that we had no programs here. And so seeing that opportunity, we eventually started getting funding to run in DC. Very first one was the Future of Longevity program funded by Melinda French Gates's Pivotal Ventures. And that's run as a hybrid program out of DC. When we got that, I left the dean's office for the classroom to say that's a great thing to do. And I've been an MD for the last couple of years for supporting that. And now, in addition, the JP Morgan program in DC as well. And so that's kind of my background in a nutshell.
That's terrific. Thank you so much, Keith. And your colleague, Adam Phillips, Managing Director of Techstars Equitech Accelerator. Adam, tell us a little bit about yourself.
Yeah, I appreciate that. And just echo Keith's, thanks for having us on. Very much excited to be a part of expanding the ecosystem here and really helping to consolidate the ecosystem here. We think there's a lot of strength that's already inherent in the area. I've lived here for probably, it's been 20 years, almost 20 years. Tons of vibrancy, tons of excitement in the DMV. We love it. And excited to have Techstars here too. So a little by way of background, I'm a teacher and an attorney by trade, actually. Speaking of Next, I came out, about 14, 15 years ago into the venture and edtech, venture-backed company in an edtech space. Worked with some folks out of Austin, Texas, and kind of got sucked into investing and working in, kind of on the startup side ever since. I've still practiced every now and then, but yeah, have been kind of out of practicing law for a little while now. So yeah, I was an edtech venture-backed founder 15 years ago, 14 years ago. Really loved the ride. Exited to, Google Chromebooks, which destroyed us when they came in our category. But it was a great ride. Learned a ton about building a business, a ton about going around the country and really trying to make something happen, kind of pulling it out of the dirt. Worked directly with the people who were also originally the money in the business. So again, learned a lot about being venture backed. Also did, like Keith, went to sort of post VC backed, went to, kind of some regional plays we completely owned them, not venture backed, and enjoyed that as well. But always thought and always said my favorite job was working, frankly, when I first graduated college, I was a part-time middle school basketball coach for 7th grade girls. And one of the best jobs I've ever had. And I feel like the accelerator space is very similar to being a coach. I love the coaching. I love helping people sort of find what they have, building on what they have, finding what they're missing, building on that. And really the accelerator space is so much like that. And I'm very excited to be working with Techstars. I've been in the orbit of Techstars for probably about 3.5 years. I started in the Chicago ecosystem, was working with the groups out there and got to see them as a sort of originally just as a friend of the people who were involved, a mentor, then became an EIR in Keith's program. I was hired by Keith. Thank you, Keith, to be an EIR in the DC program when it started. And then this opportunity came up in Baltimore and was able to get the MD job. So very excited to be here.
Well, thank you. We're thrilled to have you too, Adam. Right now, I'd like to turn things over to my co-host, Anthony Millen. Anthony is a serial entrepreneur. He's a venture capitalist with the Third Sphere family of venture capital funds. And he's also one of the nation's leading startup attorneys. Anthony is founder and chair of Next, powered by Schulman Rogers, which is disrupting the way that legal services are being delivered via a unique fixed price structure that allows for expert legal advice at a manageable cost, especially for early stage companies. Next was recently selected by Legal Week as Startup Law Firm of the Year, and they've garnered some additional nominations, and hopefully we'll have some awards to announce relatively soon. Anthony, turn it over to you.
Great. Thanks, Tien, and welcome, Keith and Adam. It's great to have you on today's show. Where I'd like to start a conversation today is you have Techstars that is invested in more than 3,300 early stage companies in multiple market segments across the world. And when you look at that type of success and that type of growth, what do you think differentiates Techstars from other accelerators or pre-accelerators? And how have you been able to scale that at a global level that Techstars now sits in?
Yeah. All right, Keith, you have more history. Yeah.
Yeah, I'll comment on that because, again, for my prior role of I was literally traveling around the world to visit all our ecosystems that we supported, managing the managing directors who are the managing directors of the people who run the local programs. And so I had a little bit of insight into that. And I think the superpower of Techstars has been the thing that's allowed it to scale. By the way, the founders didn't design it with the intent of scaling it like this. It was designed as a, experiment in Boulder, Colorado, 15 some odd years ago to see if 100 mentors surrounding 10 companies for 3 months could expedite their journey by seeing around corners. And so with the punchline is that experiment worked and worked so well that at first they were being pulled into other cities to come bring this to our city. And then eventually got approached by some corporate partners like Microsoft, Nike, and Disney to run accelerators for them. And all of a sudden it started emerging that, this is a fairly scalable model, in fact. And so the way I describe it is that we have the best of both worlds at Techstars, which is we operate in these little, the atomic node of a 10 to 12 company accelerator with a local program team on the ground, supporting them through the program, giving them capital, access to mentorship, access to subject matter experts, local ecosystem. And local can either mean geographically local or vertically local. So we run a future of longevity program here that's all about age tech. And that's, it's national, but based here. And then we run the DC programs that are really about the local ecosystem. So whether it's in a tight vertical or in a region, we're able to go in and really support the founders in a very direct, hands-on way relative to the other kind of giant programs that are running hundreds of companies at once, which is effective for some people, but I think less effective for companies in a particular niche. We couple that, and so on the one hand, that's a local accelerator. And there are a lot of good local accelerators. There are a lot of good one-off ones. The thing that we add that's the unique is that we have both the local firepower and the connectivity to a global network. So our founders get kind of the best of both worlds there of the hands-on support combined with access to a global network of investors, alumni, mentors, and so forth, corporate partners. And so that's what I think makes the platform special is our ability to really, and I should have started, I buried the lead here, but the headline on that whole thing is that we are founded on the belief that talent is equally distributed, even though opportunity is not. And so our ability to go to where the talent is in the verticals, in the cities, wherever else it is, and support them in a very hands-on way is what then actuates that belief and makes it very powerful. So that's my, that's what I observed all around the world.
So, it is very unique, as you said, this ability to act locally, but think and be part of a very global infrastructure. Especially the way the world is distributed, you have the best of both worlds. So that is really helpful to understand. In terms of your portfolio companies, how do you measure success? When you look at the milestones that Techstars is helping their portfolio companies achieve, is it more capital raised? Is it, exits? What are the areas that you look at when you say that was a successful portfolio company coming through our system?
Yeah, I think we do have all the same traditional numbers or typical metrics. We're going to look at capital raise. We're going to look at exits. We're going to look at IPOs. Those are all important to us. I mean, we're an investment company. We want to make investments that are in growth companies. I think we also add to that sort of layer on. One of the things which I really appreciate about Techstars is I think even actually, Keith, you mentioned to me when we were talking, I was talking about coming on to DC, was that we have companies that stay in business even longer than the typical accelerators, right? Like not only just success after 5 years, but still in business after, 7 years, 8 years, 10 years. And to me, that's sort of, goes along with what our CEO has started to talk about, like dragons instead of unicorns. So resilient growth companies in, the midst of environments that can come and go and change, which, of course, we're starting to see a little bit of that, whether it be in the public or the private markets, but we're building robust companies that can grow and sort of weather some of these situations as well. And we think that really does have to do with, like we talked about sort of the hyper node and then the ability to sort of bring to bear the power of the super node when you need it. And that's really the magic of any sort of personal network. And this is really a personal network at scale. So.
And when you talk about the actual program and you mentioned how its roots were around surrounding 10 companies with 100 mentors, and you're really working on helping these companies de-risk. How is the program structured? How do you pull in the mentors and the methodologies to help these companies de-risk during this period of time that they're with you?
So I can start kind of generically, and then what we do within local programs. There are slight nuanced differences based on a program and who the partner is and how they're able to support as well. So depending on the vertical, and that's the other thing, we customize a bit. So we're meeting the founders where they are and in the verticals they're in. And if you're doing a retail program, maybe there's access to different things and so forth. But generically speaking, the program is in a few phases. I call the first month or so is kind of slow down to speed up, where you do two things. In week one, we tend to do a lot of what I would call strategic planning for founders, where we go do kind of a vision to execution mapping exercise, consider it a mashup of things that would be in books like Traction and Lean Startup and Levers, which is a Techstars written book, to really get them thinking all the way from their vision to how they're going to execute every day against it and become strong execution machines against their upcoming milestones. And the milestones might be their next fundraise and the fundraise after that they expect to be on a venture-backed journey, or it might be about pilots or whatever else. So how do we really focus the effort there? That's for about a week. And then we spend the next couple weeks in what we call mentor madness, where they start speed dating with a lot of the mentors. And that can be that they all meet the whole group of mentors or a curated experience, but they get a lot of feedback from different mentors on that strategy and refine it as they go. And so the whole goal there, like what actually happens in that period, is that you start getting to see around corners from past experts that, like, boy, maybe the market segment that I thought was my primary for this and I'm pursuing, boy, there's a lot of roadkill down that segment. Here are the things to watch out for. Oh, did you know that customer has no budgets to spend, the one that you thought that was going to be really good? And boy, I would have saved 2 years on my startup. And the ones eventually venture-backed and high growth, it took us 2 years to go down the wrong segments. My first customer was the New York Knicks, and I thought pro sports was going to be the thing. And it turns out, had someone told me how hard it is to sell to teams after that first one, I would not have pursued that for a year. So that's the kind of thing that mentorship really can help with. And then it also can help with introductions to potential pilots and so forth, but really hone the strategy. All right. So that's month one. Then coming out of that mentor madness, now they emerge with somewhere from 3 to 6 lead mentors who will follow them for the rest of the program. So that speed dating has 2 effects. One is to get a lot of feedback, and the other is to see who should be their advisory board through program. And those are experts with different backgrounds. Maybe there's a startup CEO to help you with that journey, someone who's a marketing expert for your digital marketing and so forth. We're then going to an execution mode. So we want to iterate every week, focused on like, what are the key KPIs and OKRs for the week, hold some group accountability. We have forums together. We have weekly meetings. I won't take you through the gory details, but we're really trying to have them be execution machines against their next milestone. And then we finish up with investor readiness, which is a combination of their whole toolkit and also getting ready for a short pitch, 3 minutes or so. That would be a demo day, which in some places is live, in some places is virtual, but that's sort of our show. And then post program, we continue to support with access to network, investor introductions, connection, and so forth. We have a global founder con, our founder conference, where people go out. We just recently did that in Oakland end of last year, where alumni from all over are coming in, from Series A's to Series B's to exited billionaires, who were on the stage talking about their journey. And it's so that's kind of the experience.
I imagine with the number of startups that you've helped, that piece you just talked about, which is the alumni, and that network of founders becomes a tremendously valuable resource and part of the program that grows in value all the time.
Yeah, I was actually going to tell a story about that. That's happening literally right now. So we're in Mentor Madness. This is the war room for Mentor Madness in my program right now. This is like day 5 of Mentor Madness. So I have a company that was meeting with, obviously going through the Mentor Madness with everybody, but seated in that Mentor Madness were 2 folks who, one I didn't know was there, exactly how they were going to connect, and one I did. The one I planted there, this was a Wall Street person who knew exactly sort of the kind of people that this company would be selling to. I mean, would be able to sort of, poke all sorts of holes in what they thought should be their business model, in a good way, in a positive way, and sort of give them what they needed to be able to sort of strengthen. They just came back literally this morning, and we're like, I'm so glad we met this person. Last week, they met with somebody who I did not know why exactly they were going to cross over, but turns out that person is one connect away in the Techstars network from one of the people who could be a clear competitor and a clear exit for them. So just the serendipity of that is so interesting, which sort of talks about how Mentor Madness runs, and you never know what's going to happen. But like you talk about the network, having that Techstars network be able to say, hey, yeah, we're going to connect you one person away to this person this company who could be either a clear competitor or a clear exit for you, and have that conversation now is hugely valuable. And that, like you say, only echoes out over time and we'll talk about Give First, I'm sure, but that's really the thing that originally drew me to Techstars, which is that we ask even our founders now to be Give First in the network. And so that just keeps echoing out for the folks who are alumni as well. They also give first. Whenever they're contacted by another Techstars person, they're expected to give first too. So yeah, it's fun to see that happen.
And we definitely have spoken to people from Techstars and alumni, and there's a tremendous passion and excitement that you see in companies that have come through and worked with you. The last thing I just wanted to touch on, Adam, you kind of referenced a little bit times, we're in a little bit of a different market and times are changing. And I'm interested, you guys, just given your global, both local and global perspectives across the pre-seed and seed market segment, it would be interesting just to hear what you see are some of the trend lines or changes that entrepreneurs who are entering into this particular stage should be expecting or anticipating.
One of the things we're finding in some ways, I think, is that, and I'll be interested to hear you talk about it too, Keith, is that it feels a little bit like the market is coming to us in some ways, not completely, but the whole dragon versus unicorn thing is really a reflection of us intentionally sort of building or bringing a network around folks to harden their business model so that they're real businesses with real customers, a real model, a real plan, real revenue. We completely understand that, raising money is also part of this. And it is absolutely something we focus on. But, we slow down to speed up. That's really on purpose in the beginning. And that's getting down to what are the levers in your business that you can pull to raise revenue, to find customers, to build something robust. So that's always been part of what we do. So I do see other VCs talking about that more now with their companies and their especially pre-seed and early seed companies. But we've been doing that. And really for us, while we're sort of recognizing what's going on, we're still building the same way. So Keith, I'd love to hear you.
Yeah, I agree 100%. In times of headwinds, having an accelerator gets even more valuable than in times of tailwinds. And maybe to step back a little bit on it, Adam is alluding to writings of our CEO, Maëlle, on dragons versus unicorns. I would suggest anyone go and read that blog post on her LinkedIn, links to an article, I think it was in Fortune, on this, which is terrific, and talks about the resilience of founders and if you're going to pick a mythical creature right now, it's not a unicorn anymore with the butterflies flying around it. It's the dragon who can be, muck down in the mud and slog it out for 10 years and be resilient. And I think it's just a very powerful point in what Techstars has always been strong at. Another great post is by our co-founder and board member, Brad Feld, who talks about, I think it's called What Just Happened. And the punchline to that is that for anyone who is old enough to remember the internet bubble, there's some, there's some similarity. I mean, a lot of differences. However, the whole point of his blog post is that there are a lot of people prognosticating about what happens next. He said that for people who have been through the drill of downturns before, we know what happens next, and here's how to prepare for it. And every company is a little bit different on how you prepare for that. And I had the good fortune during my fitness tech company to have what I thought were the old guys on my board. They were probably my current age, and they had all the wisdom of what happens next. And they saved us and had us emerge stronger at the back end. And so I think here's the punchline is that great companies historically are built in both headwinds and tailwinds. If you look back at the eventual exits, it doesn't matter when you were founded in terms of getting to a great outcome as a great business. Sure, there might be like this bubble opportunity getting an IPO that, recently that doesn't exist right now, but great companies are built in both. In tailwinds, what happens is more companies are supported in any given segment, and the shakeout of who's going to emerge as the winner of a category happens later because everyone got these resources. And so there are massive, and it all feels good. It all feels good. And that was what started happening in fitness tech as an example. We had 20 competitors follow us into the market that we were the leader in. They were getting irrational capital. Once the shakeout happens, often in headwinds, only one is going to emerge, maybe two. So that shakeout just happens earlier than later. So the punchline is if you can do a good job navigating harder times, you are set up to have a market to yourself because your competitors are having this trouble too. So how do you get effective at navigating harder times? And that goes back to Adam's answer of that being in a program where you can get that mentorship and support and a network and connections can be a difference maker and emerging as the winner of your category at a time when it's valuable. Even if it feels harder now, it's equally hard to run in tailwinds. You got more competition. You got a lot of resources, but you got more competition. Someone's going to win, and it just happens later. So that's my experience.
That's really valuable insight for founders who maybe haven't been through the cycles and can't see around some of the corners that you guys talk about, being able to see around and help them see around. So that's great. So Tien, I will hand it back to you.
Terrific. Thank you so much. Let me start with a question for Adam, probably. What are your goals in Baltimore in terms of what types of companies are you looking to bring in and attract? And also, because you've been around the block, as has Keith, what do you find are the strengths and weaknesses of the Baltimore startup ecosystem? And Baltimore is absolutely, critical to our region. And it's had its downs and ups and downs and ups, and hopefully has great days ahead. But what do you find as the strengths and weaknesses of Baltimore?
Yeah, that's a great question. This gray hair is earned, though. Yeah, I have been around that block, so it's real. Yeah. So goals in Baltimore, we're a partner program with Upsurge Baltimore. Upsurge is essentially, it's almost like a quasi municipal organization. They're not municipal, but it's essentially a nonprofit here, but it has its arms around really a big mission in the city of Baltimore. And it includes the government, includes private companies, nonprofits, all of it, which is essentially kind of boiled down to, they want to create a city where innovation benefits everybody. And that was really the guide. We're one part of their strategy. We're just kind of the high growth tech sector part of their strategy. But I did use that as a guide when I, was picking companies to bring into the program because, it fits with sort of our partner's mission. So what we were looking for was industry agnostic. We were open to any companies that were growth companies, but that fit into that mode where either by dint of the founder or the kind of company they were building, they would create innovation essentially that would benefit the whole city. So we were able to be opportunistic with some of the great companies that were already here, which is excellent. They have some excellent companies that are already nascent to the system in the ecosystem in Baltimore. We have 4 or 5 companies that are very familiar with Baltimore, very familiar to Baltimore. And then we have, 5 or 6 who are new from out of the city, some from California and New York, a couple from New York, a couple different places around kind of the East Coast as well. But yeah, it's a really nice mix of really the thing we almost always in pre-seed, we qualify for is the founder first, when you're looking at all these applications and you see hundreds of applications, you have to look at the business model a little bit. And figure out, okay, here's kind of where my line is. But then when you get into those interviews, you're talking to 100 people. Really what I found is these 10 stuck out, their founders stuck out. And they were the ones that persistently I kept wanting to be in community with, frankly, for years, because that's what you're in at pre-seed level is, you have to have a business that's over a certain line, but then you're really controlling for founders who can pivot when they need to pivot, who, can take coaching and will take advice from not only you, but other folks who are smart and in the ecosystem and can help them grow and who are sort of willing to do the work. So really that was kind of the ultimate controls within the context of our partner's mission, of Equitech, meaning innovation that benefits everybody. It was mostly controlling for the founders and then sort of their business ideas. So we really, I was so happy and pleased when we finally all got together in person, was like, oh, shoot, we chose well. Like, this is good. And the founders were really, they've just proved themselves to be a real credit to their businesses and themselves. And it's been very exciting. So we're excited about what's coming up. Strength and weaknesses, I think, of Baltimore in some ways are exactly the same thing. Baltimore is, for a lot of reasons, geography, sort of the history of the way that the housing has worked here, tons of reasons. It's like a very big, small town. So everybody knows each other. Everyone's well connected. All the lines are already sort of established. So really what that means on the positive side for us is like we are wired in right away. As soon as I landed here, I'm from Buffalo, New York, and it's similar. It felt very, very similar to me, sort of an East Coast Rust Belt city that, like Pittsburgh and Philly, we all sort of understood each other. So we were wired in right away, which has been great. Baltimore's been, they put their arms around us for sure. And they're jumping in with both feet for the Techstars program. The other side of that, the challenge of it is it's, everybody knows each other, right? So you have to kind of build on relationships that are existing and sometimes navigate around some of those things in the past that maybe you weren't even a part of, but are still there. But again, it's much more positive than negative, I think, in terms of how that grows together. So we're very excited about what's coming in Baltimore.
That's terrific. Yeah, we love Baltimore, and we think that it's got a lot of bright future ahead. And Keith, how about the same question for DC? What are your objectives in DC? What are you looking for? And also, now that you've sort of deep dove into the ecosystem, what do you find are the strengths and weaknesses of the Washington region or the Washington area's startup ecosystem?
DC's got a lot of strength for supporting startups, and for context, let me frame that with saying that a little bit of this is drawn from Techstars is going and support locally, but as part of a global network, you find the strengths of the local ecosystem for the types of themes you want to support there. And so a great way to think about it, I found from our one of our local legends of Steve Case in his book, is on the third wave. The whole idea is that we've now are in the third wave of technology, of internet technology, where the first couple of waves were about the tech-centric solutions, so the internet and then mobile. being 1 and 2. And those were really very Silicon Valley based because you benefited by being in a community of other techies, around techies, for techies. We're now emerging into these third wave solutions, which are more tech enabled than tech centric. So many of our companies are disrupting business models and industries using tech that they're not necessarily inventing patents on the tech. The novelty is how they apply it to their category. Well, what happens is when you're doing that, you actually want to be out in the ecosystems where your potential partners are, the gatekeepers are, the regulators are. So that then leads naturally to what DC is very strong at supporting and has tended to be some of our local companies as a result. So things that, we're the worldwide hub for policy making, right? So if you have something that's policy centric, or if the regulators and or potential partners are here, we're perfect for it. So that ends up looking for DC, in our opinion, like things around for a local program, ed tech, fintech, gov tech, health tech, cybersecurity. And so that's a real hub. You come in, you get the mentorship, you have the access to partners, you can talk to, you can talk in person with people who are part of regulating those categories and see what's coming. You get part of panels for that. It's quite powerful for that. In addition, it informed our decision to put the Future Longevity Program here when Pivotal Ventures came to us and said, hey, where should we run this? And we said, well, look, here's the hub where the National Institutes of Aging are, AARP is, and so forth. And what's happened is that the partnership opportunities for that the startups get by being here for that are enormous. We have companies that have come through and actually gotten a couple $1 million non-dilutive funding from NIA. Our longevity program just announced a partnership with AARP where you get access into their Age Tech Collaborative for going through it. So there's a lot of benefits for being here if you're in categories like that. And then that probably so that's the strength. I think the weakness historically has been DC has had a harder time in cities like New York retaining its great companies. So we heard in focus group testing beforehand, sponsored by George Washington George Washington University did some focus group testing on this with Jim on like, what's going on? Why aren't we getting this next stage? And one of the pieces of feedback that we heard loud and clear from a founder who's now a Series A in New York City, who started their company in DC, what happened? And they said, well, we didn't have the bridge to get from our startup to next. We got our first pre-seed round from New York. So we went up there and then we just stayed. And so what happens is once a company plants its flag and starts growing a little bit, that then becomes like the impetus to stay. What the accelerator does to change that narrative is that if we can be the support, that bridge from your good idea, your beginning of getting a little bit of traction to you getting to pre-seed and hopefully introducing the next round of investors, they're going to build here and stay here. So I think the weakness has been we haven't held on because we haven't had that step in the baton passing at the stage we're now trying to fill in. We also, interestingly, now are importing people. So we have companies that just went through our DC program who decided to move here. And so we're reversing that narrative. And I think it's going to be quite powerful because they got a pilot where they found that this was helpful. And now that, they might be thinking, hey, we're going to do that briefly. But what happens is the momentum builds around the place that you start forming your company. So, I guess that's a strength and weakness all combined and hopefully an opportunity and part of the reason that I think we can help be part of the solution.
I just have to double click on that's such an important point about keeping companies and importing, first of all, which I think we naturally do, which is great, but keeping companies here too. It's hard on the East Coast. I shouldn't say it's hard, but there is a typical, on the West Coast, everybody sort of gets the idea of venture capital. It's kind of in the it's in the air. It's just part of the water. On the East Coast, that capital seems to sort of trend a little more conservative. So it's really important that we sort of build these things and make sure that we're part of helping folks understand when we can unlock the capital. I think we help folks understand that, look, this company came from New York, got a great pilot, got a little bit of bridge funding to stay. And now look what you've got. Look at all the jobs that are here. Look at the reverberations in the community. So yeah, that's a great part of this.
Yeah, I totally agree with you guys. And I think in some ways, the acceptance of virtual and tools like Zoom post-pandemic is maybe helping to keep companies from going out to the West Coast or going up to New York, the capital of in those markets,
Mm-hmm.
So we'll see, I guess. I think we're almost out of time. So I have a final question. You guys, as you know, you guys are a global global organization with tentacles everywhere, and it obviously takes a village. And we have lots of viewers and listeners who are in all parts of startup land, interested in investing perhaps, or mentoring, or just getting involved in some way. How can they get involved with Techstars and or some of your cohort companies as an investor or a mentor or some kind of service provider?
Yeah, I'll start. Definitely, you can certainly reach out to me personally. If you're interested in my classic companies, adam.phillips@techstars.com or Adam Hugh Phillips on LinkedIn. You can find me there. I guess I could pass you guys my info too if you're going to post it, maybe in some notes or something. But yeah, that's great. If you're interested in our class or classes ongoing or anything in Baltimore, that would be great. Reach out to us directly. You can also just sort of reach straight to the Techstars website, and we have kind of intake forms for mentors, which becoming part of that mentor network is hugely valuable for us. I mean, it is a part of our model, essentially. It's not even, if you never kind of hang on with one company through the whole process, like even the one-time mentors, we really count as valuable within what we do. So that part is, it's a great way to get introduced to what folks are doing in any specific program, but also kind of the concepts of what Techstars is trying to do. You'll be able to see it through there. That's a great way to get introduced. If you just wanted to reach out and see some of our media properties and visit us when we're recruiting, that's also stuff to just sort of get your feet wet with what Techstars is trying to get done for companies that come to the accelerator. So lots of ways that you can reach us, and we're open to all of them. And if you want to, I think there's even a sign up for investors on the website. Is that right, Keith? I think you can also volunteer there, but whatever it is, if you're interested, we'll find you too. But, sorry, go ahead, Keith.
It's a similar answer. Give different paths for different types of interests. So for investors, please reach out directly to me. And if these themes are of interest, I can curate some introductions to you based on the themes that you're interested in. If you're interested in playing at these stages, you can reach me because my name is not intuitive on how to spell. I got them to give me kc@techstars.com.
That's pretty good.
So Adam, that's the old guard trick. So we can
that's good.
Abbreviated email. So kc@techstars.com for investors wanting like curated intros, and we'll put together portfolio intros to you. And we also love for investors, if you're seeing companies that are too early for you, like let's say you play in the seed or Series A stage, talk to us if they're on theme, because we would love to take great companies, help de-risk them, get them ready. You can follow them through the program and see if they remain an investment opportunity afterwards. So that's number one. Companies who are interested in our programs, I recommend that you actually do some homework first before just reaching out, just like we teach them program for you to go reach out to your next stage investors. So have a look at the website. So Techstars, the DC program and the longevity program are both there. We also keep a LinkedIn profile where we post things periodically so you can see the founders that are coming through current programs and get a sense on if something's a fit. There are application links on our websites if you want to apply, and that's the best way to get in touch as a founder. We can help triage you to question answering right now, but the volume of time to spend time with people who are just interested gets harder. So we encourage you to do some homework first.
Wow, that's terrific, guys. Really appreciate it, and hopefully people will be reaching out to you guys and getting involved. But I'd like to thank you guys for joining us and turn it over to Anthony, who has some closing remarks.
Great. Thanks, Tien. And Keith and Adam, we just want to, as Tien said, thank you very much for joining us today. We thank you for your leadership and the role that you're both playing and that Techstars is playing in our local startup ecosystem. It's a really critical role, and you bring so much value in your leadership and your example that you're setting. So thank you again for joining us. And thank you for all you do.
It's been my pleasure. Thank you.
Appreciate it. Thanks for having me.